Hey everyone, welcome back to FX Limit, the channel where we simplify Forex trading for you and help you stay on top of your game. In today's video, we're going to talk about the best Forex strategies for trading during recessionary periods. Recessions can be challenging for many traders, but with the right approach, they can also present some of the most rewarding opportunities. So, if you've been wondering how to navigate volatile markets when the economy is down, stay tuned. This video is for you. Let's dive straight into it. First things first, why do recessions matter in Forex? Well, during economic downturns, countries experience reduced growth, declining consumer confidence, and, in some cases, deflation. Currencies are directly tied to a country's economic health. For example, a struggling economy may lead to a weaker currency, while other safe haven currencies like the US dollar or the Japanese yen tend to strengthen as investors look for stability. So the main thing you want to focus on when trading during a recession is identifying clear trends. Recession-driven markets are often volatile but also directional, which means they can trend strongly for days or weeks. This is where the trend-following strategy becomes your best friend. Step 1. Trade with the trend. This might sound basic, but trading with the trend during a recession is the key to success. Forget about catching tops and bottoms. Focus on identifying the dominant market direction and ride that wave. The goal is to look for consistent movements in a currency pair. Now, here's where tools like the Apex Trend Indicator can make a huge difference. Instead of manually analyzing multiple charts, the Apex Trend Indicator quickly scans pairs and identifies the dominant trend for you. When you see blue on the trend scanner, you know you're in an uptrend, time to look for buying opportunities. If it's red, that means we're in a downtrend, so you'll want to sell or short the pair. The system also gives you entry and exit signals with clear stop-loss levels, so you can manage your risk effectively. Remember, during recessions, trading emotionally can lead to mistakes. Having tools that show you clear trends and signals removes the guesswork and helps you trade with confidence. Step 2. Focus on safe haven currencies. Safe haven currencies like the US dollar, the Japanese yen, and sometimes even the Swiss franc tend to perform well during economic uncertainty. Why? Because investors and institutions flock to these currencies to protect their capital when riskier markets, like stocks, are crashing. For example, during a recession, if the Eurozone shows weak economic data while the US dollar remains strong, you might see Euro/USD trending sharply downward. Using the Apex Trend Indicator here can help confirm whether the pair is consistently trending lower. You'll get a sell signal, complete with target profit zones, so you can set up your trade and let it run. Step 3. Look for breakouts in major pairs. During recessions, volatility tends to increase, and price breakouts happen more frequently. This can be a great time to trade breakouts from key support and resistance levels, especially in major pairs like EUR, USD, GBP, USD, or USD, JPY. Here's how you can approach it. Wait for the price to test a key level. Use the Apex Trend Indicator to confirm the direction of the breakout. Enter your trade with a clear stop loss and take profit target. The great thing about this strategy is that you can catch large moves with relatively small risk. Once the apex trend indicator gives you the breakout signal, you don't need to second guess whether the move is real. The system calculates everything for you, including risk to reward ratios. Step 4. Be cautious with exotic pairs. During a recession, exotic currency pairs can become extremely volatile. While this volatility might seem tempting because of larger potential profits, it can also wipe out your account quickly if you're not careful. Stick with major pairs or well-known crosses where trends are more predictable. And if you're still keen on trading exotics, make sure you've got the right tools to guide you. The apex trend indicator supports all pairs, including exotics, but you'll want to ensure the success rate on the scanner is high, ideally 70% or more. If the success rate is too low, it's best to avoid the trade and wait for a better opportunity. Step 5. Keep risk management tight. Recession periods are all about survival and long-term growth. You can't afford to risk too much on a single trade. Always use stop losses and calculate your position size based on your risk tolerance. The apex trend indicator automatically provides dynamic stop loss levels based on support and resistance, which is incredibly useful in volatile markets. Additionally, you can set trailing stops to lock in profits as the trade moves in your favor. This way, you're protecting your capital and still giving the trade room to breathe. Bonus tip: trade higher timeframes. During recessions, the market noise on lower timeframes like M1 or M5 can make trading stressful and difficult. Instead, focus on higher timeframes like H1, H4, or even D1. Trends on these timeframes are more stable and easier to follow. Plus, the apex trend indicator works seamlessly across all timeframes, so you can analyze trends without jumping between charts. At the end of the day, trading during a recession is about staying disciplined, managing risk, and focusing on proven strategies. By following the trend, sticking with safe haven currencies, and avoiding overly volatile pairs, you can navigate the market confidently. Tools like the apex trend indicator simplify this process by giving you accurate signals, clear stop loss levels, and high probability setups. If you found this video helpful, don't forget to like, comment, and subscribe to FX Limit. Let us know in the comments how you've been approaching Forex trading during recession periods, and if you're interested in learning more about the apex trend indicator, check out the link in the description below. Thanks for watching, and I'll see you in the next video. Stay disciplined, stay focused, and happy trading.